your host and moderator for our first panel of the day. Our panel topic today, e-payments in a time of COVID-19 pandemic. Joining us on the panel today, we have industry experts in the payment sector, and they're here to provide their insight on the topic. Attendees, please do not forget, this is a live Q&A. We're taking your questions on YouTube, on Facebook, on our Zoom chat. So without further ado, it's truly my honor to introduce you to Robert Beadles, CEO of Monarch, Filipe Castro, co-founder of Utrust, Kane, CEO and co-founder of Ternio. Thank you, gentlemen, so much for being here. I really appreciate you.
Thanks for having us.
Thank you.
Definitely my pleasure. Definitely my pleasure. Gentlemen, again, and we know this is a crazy time and it's a pandemic, and we wanted to get your insights, as I spoke about before. But if you can take just a brief moment and introduce your company to the audience and tell us what your roles are there. We'll start with Filipe, Ian, and then to Robert.
Absolutely. So for those who don't know, Utrust, we provide a way for e-commerce merchants to accept cryptocurrency payments from their buyers, and we settle directly in the bank account in euros, US dollars, or British pounds, making the process seamless, without volatility, and as simple as it can be.
All right.
Hey, I'm Ian Kane. I'm the COO and co-founder of Ternio. Ternio provides white label technology to other companies in the crypto space, primarily around fiat on and off ramps. I think Ternio is probably best known for our block card. You go to getblockcard.com and check it out, which is basically a Visa card that gives you a seamless way to easily spend your cryptocurrency anywhere Visa is accepted.
What's going on, guys? So I'm Robert Beadles, also known as Crypto Beadles on YouTube and a bunch of other places. Christian, husband, father, and I'm the president and builder of Monarch. So we have Monarch, which is a decentralized wallet that has all the coolest and all the features you could ever want with cryptocurrency, storing it, owning your own seed, sending payment, receiving payment, buying, selling, swapping, managing your portfolio, all that kind of stuff for the consumer. And then we also have Monarch Pay, which is for the merchants. So using stable coins and stable tokens, it allows merchants to basically have zero chance of their money ever getting clawed back or chargebacks or paying more than 1% in transaction fees. So then I've got a ton of other companies, but I'll just keep it for right now.
Fantastic, gentlemen. Thank you so much for the intros. Listen, we're all in e-payments, and people definitely, obviously, want their platforms running ideally, optimally, especially during these times. In some instances, you are the lifeline to these folks right now. So one of the first questions we have up right now, how are you managing your company to balance out employees not being able to work as normal and also still maintaining a respectful level of work productivity during these times? Ian?
So, it's a good question. I think, at Ternio, we've actually been fortunate enough that probably about a year ago, we actually went fully remote. We used to have a physical office, and then we realized, working in the crypto space, it's a 24/7 business, and it doesn't make a lot of sense for our developers and our team to really be sitting in traffic, driving back and forth. And so we made that jump, and, thankfully, we're actually very well prepared for, the kind of brave new world that we're living in now. I have to say, between having a fully remote team that's already kind of comfortable working from home and being self-starters, combined with tools like Slack and Google Sheets and Zoom, our productivity hasn't changed. And while the world has, we've been able to really kind of quickly adjust.
Okay. Beadles.
All right. So I guess I'll stick with Monarch since it's, it's more fitting for this conversation, I guess. I have other companies that are service related and construction and totally different ball of wax here. But with Monarch, much like Ian was speaking to, we have a decentralized team. So, we also own a software company. We have a lot of people in house. But since this pandemic, or whatever you want to call it, hit, basically everybody's been working from home. So we already had a decentralized team, but then all of our in-house developers, they're all working from home. And so we're still keeping our productivity, rather high, all things considered, while still trying to meet the needs of any of our employees. Because, this is a challenging and difficult time, even though they're working, even though they're, still able to, I guess, add purpose and value to Monarch. It's still very difficult on all of our employees to be kind of blocked out of the world, right? They're used to having routines, and all this stuff is made it difficult for a lot of people out there. So we try to give them the support that they need, whether it's just a phone call, whether it's Skype or Zoom, and then of course basically making sure that all the CDC guidelines and all that stuff are met, and we're doing everything we should be doing for them. But it's a really tough and challenging time for a lot of people around the world right now. I mean, geez, look at hotels and restaurants and bars and airlines, and it's difficult. So Ian and I, and it looks like Ian and I and a lot of people in this space, are kind of weathering the storm a little bit better because of the ability to work remotely.
All right. Filipe, what do you do?
Like Ian and Robert said, it's very similar since the beginning, because we're software and very decentralized since our very beginning. We are able to cope with this. We have people working from home. We have online tools. We were since the beginning very remote friendly. So this hasn't impacted so much ourselves as other industries who might be more impacted by inability to go to work or move. We continue to have more sessions. We have actually more online gatherings, and we are actually more supportive of our team members in an online fashion, since we cannot do it face to face. But all in all, our productivity is still on the same level as it was before. And I think it's very common to all software-based companies.
Have you had to have any layoffs, anyone?
Not yet. We were very fortunate not to have any so far. Although that we know that in many other industries, other companies are contemplating that.
Okay. Well, that's it. That's very good.
I was going to say, I think for us, we've been fortunate where it's actually a good time to actually find new talent. So, we grow, and we've been growing slowly, but it's really good. And as you guys both alluded to, the world is changing very quickly. And so, we've been fortunate, and knock on wood, we want to continue at that same pace.
All right, that's good to hear.
Yeah. And again, no layoffs here either. God's been great to us, as well as our employees. And so like Ian was saying, actually right now is kind of a good time to pick up some people that, may not be working. So for the first time in a long time, I've seen kind of a surplus, an abundance of quality programmers, that, maybe aren't able to work from home. And so able to actually start hiring versus the opposite of laying people off.
Okay. That's and silver lining in a absolutely crazy time right now. And some people can kind of balance their lives out when everything's a little out of whack. So let me ask you, while we're on here right now with you, Robert, what's the biggest challenge your company has had to face from having employees work from home, but having to have to take time off? How are you dealing with that? Have you had anybody sick?
Yeah, well, luckily, thank God, nobody's been sick. None of our employees have, contracted, even the flu, let alone, CV-19. So we've been very fortunate there. Our team is, a bunch of great guys and gals, and so, they've been dealing with this very well. Some of them, have, a few more, it hits them a little bit harder than others because they're social, right? They enjoy being in the office, they enjoy being around other people, and so this is kind of difficult for some of them. So we try to give them that support. But aside from that, we haven't really been impacted with anybody getting sick or needing time off. They're still able to contribute. They're still able to add value to the mission. The biggest problem we have in our business, and I think everybody here, is blockchain, right? So blockchain is still kind of very difficult for people to wrap their minds around, and we're trying to make something very simple for people to use that adds a lot of value, more so than just the stuff that they're used to doing. So I think blockchain in general is the hardest part.
Well, I would have to agree on that. And when we're talking about the daily, let's just say that your business, your normal engagement, have you seen certain sectors of your business and upticks in any certain sectors of the business dealing with in your engagement?
We've actually seen cryptocurrency usage go up a little bit because people are using that versus cash. So it's kind of funny how that happened.
All right, Ian.
Yeah, I was going to say, we, obviously with Block Card is you can really kind of monitor people's spending and what they're purchasing, and kind of what you hear, broadly is that people are spending a lot of money right now on things like gas, on groceries, a lot of booze is being purchased, we're noticing, and also obviously a lot of online platforms, right? Things like Netflix, Hulu, Disney Plus, and also just a lot of online spending, Amazon, and name your other e-commerce retailer. because people are at home, right? And so their buying habits shift from things like, hotels or maybe more experiential to more product focused. So it's interesting to watch.
Ian, thank you so much for that insight. And Filipe, do you have any insights on that?
Yeah, like Ian said, we've seen pretty much a big increase in some specific articles, electronics, food, beverage, some sectors that we would expect that people tend to spend more when they spend more time at home. So it's actually pretty much the same. One thing that we also anticipate is actually fashion. And we have a lot of inquiries or new inquiries from e-commerce providers who had a very offline focused strategy, but are now investing more into the online channel because of the COVID situation. So they're actually prioritizing more and more, especially when talking about fashion. They're very focused on this new channel and increasing their online experience and focus. And they're looking to alternative ways to maximize their revenue and decreasing their operational costs. And cryptocurrencies can and certainly will be part of this in certain specific sectors. We also seen, of course, a decrease, but a small decrease in travel and, of course, experiences, tickets, and so forth. But the corresponding increase has been much greater than that decrease.
Is there anything that surprised you just out of the blue, a category that just popped up and just completely blew you out of the water?
Well, I would say that it's more about electronics, I would say, at least in our vertical, in the test merchant that we have currently. Of course, food and beverage, it's something that we don't directly tackle with our current pool of merchants, but I would suppose that will be a sector that online purchases would go up as well. And again, subscriptions is also a big one. And I think that's those are pretty much the biggest increases.
I was most surprised to see airline tickets being purchased still. There are still some brave souls out there that are traveling, and who knows, maybe it's for a much later date. But I was definitely surprised. And listen, airfare is cheap right now, so I would not be trying to take advantage of that.
So I take it, gentlemen, you're all still engaging with the outside world, just not your regular team members. Have you witnessed any behavior and any unusual behavior in the line of the e-payments channel? Any strange behaviors that you should think to take note of where there's maybe an opportunity right now?
Filipe. Yeah, I mean,
Robert, go ahead, please.
Go ahead, Robert.
Yeah, so I mean, there's lots of sayings out there. Never let basically an opportunity go to waste or a crisis go to waste. You've heard the politicians say that kind of stuff, and when you look, you've seen so many industries that are just getting blasted. You have like restaurants and bars and airlines and cruises and the sale of vehicles and planes and boats and doctors and surgeons. But what you're also seeing is there's a lot more people, if you look at like Amazon, you look at Walmart, you look at places like that, they're having like record sales because more people are at home. They're not out there, conversing with the world. So one of the things that, always, to look at is like, who's making the most money right now? What are they doing? Right. And so you can see that these online platforms that are selling things that people need and it's shipping it directly to their door, there's opportunities there. So taking things like purse.io, which is it's basically a website that uses cryptocurrency, right? That partnered or is using Amazon, and it gives people like 10 to 30% off their total Amazon, purchases. Those things are doing really, really well right now. So, because people aren't able to get out there, so they're shopping from home, and the goods that they need brought to their houses, those are doing really, really well. So there's a lot of opportunities there, I think, in the future, as more and more people are going to be, doing this type of behavior. I think going, forward. I don't know for how long, but there's definitely an opportunity there for people that are savvy to jump in and offer some value there for people.
Anything on demand, I would think, right? Like Grubhub, Uber Eats, right? A lot of people are getting food delivered, but I'm sure there's a million on-demand services for the people that are, higher risk and want to protect ourselves, Robert, like you said. And that's going to be, I think, just a growing trend that we see, even, post-pandemic.
Yeah, we're shifting a lot of our priorities in the post-pandemic scenario. So we're looking at things that we can build right now or reach out to e-commerce merchants that will enable them to regrow very fast after this is over. We think this is something that it's absolutely, we can work on them right now, thinking of that recovery. One of the biggest sectors I think will benefit a lot from cryptocurrency payments is actually fashion. If you think of the outcome of this pandemic, a lot of retail stores will not be reopened to their full potential so fast. And also the consumer will be quite frankly more afraid to go to a retail store in person. So what we foresee is that a lot of fashion will migrate to a more online experience, and that's something that we have been preparing for quite a while. It's part of some macro trends in this industry, and we're already in talks with some retailers, some brands in this sector to expand the reach of our platform. And of course, we also think that travel is going to recover. And absolutely, I think this is temporary slump. It's great if you can purchase a flight right now or an experience, thinking of our next vacation. We think that sector is going to recover. And now it's a great way to get those at low prices. So I think it's something that we're going to see a rebound for sure. And as we support more than 650 airlines, it's something that we'll certainly capitalize as well.
But speaking of airlines, and let's talk about fuel, we have a question. Is what are your thoughts on BTC and ABT crude oil drop?
I mean, they said Bitcoin was volatile, but oil is looking pretty volatile as well. So, honestly, I'm not very well educated on oil or futures or what that all looks like. But, I think that BTC has held up relatively well compared to some other things. And I think that people will eventually start seeing it more or less as a safe haven asset. One of the arguments that I've read is that, listen, Bitcoin went down when the S&P and the Dow and NASDAQ all sold off, but it didn't drop as much. And I think, you start to look at some of the other kind of financial engineering and nonsense that's occurring. And I think, you're going to have people that really start looking at crypto as maybe, like I said, more or less a safe haven, especially after the halving. But again, just my opinion.
Yeah, I mean, when you look at Bitcoin, it's down about $400, from January to now, right? So, and if you bought it at 20,000 and you're sitting at under 7,000, you're probably not very happy. I know people like to say that it's, it's a digital gold and it's a store of value, but it all depends on when you buy it and when you sell it, I guess, right? And look at oil. I mean, you've got the trade war basically between, you got Russia and you've got Saudi Arabia, and it's basically a race to the bottom, right? Who's going to, sell their oil, sooner to whoever needs it. And you see the price just keeps going down and down. And then you see the traders, they start shorting it, then they get squeezed. And right now, I mean, these are those types of opportunities where I don't ever, condone trading. I don't recommend anybody do it if they're not, if they're not, I guess, have the right mentality and the right advisors around them. But when you see these types of opportunities, there's a chance to make a lot of money right now. And so typically I don't buy a lot of stocks, but I've been buying stocks like crazy right now because I'm getting these great companies at great prices, right? So, I mean, when you see a company like United Airlines go from $100 down to under 20, you know that it's going to be there, right? That right there is an opportunity, right? And oil is going to keep being used. It's not like they're going to drop some revolutionary technology in our lap tomorrow where oil is no longer needed. So right now there's a lot of opportunities out there, people.
Okay.
Yeah. I think the oil slump, of course, it's more about the storage requirements of course, all the other factors that you guys talked, the trade war and like the prices going down. But it's this most recent slump, a lot of indicators say that it's more about the lack of capacity to store it and the lack of available storage that caused this negative price than anything else. And of course, prices rebounded already, and like Robert said, we will need oil in the future. Sure, it will not keep at zero or negative, but I wouldn't be surprised if it maintains its low value for sure. One key takeaway is that we're seeing a lot of volatility in the markets. Commodities now, after equities, we might see more volatility in the future. And I think it's part of this new normal and how pandemics affect the markets, including the crypto markets. Before this, a lot of people thought that, okay, the crypto markets are completely uncorrelated from the traditional financial markets. That's almost the case, but in certain extreme events like this, perhaps that is not the case, and they still suffer from a lack of market liquidity. About the use case of Bitcoin, well, it's certainly may have lost its appeal as a store of value, but I wouldn't say that it's universal. If you think in certain regions, for example, Latin America, it's actually less volatile than some of the local currencies. So in that context, it can be a store of value. In more advanced economies like the US, of course, it's not as stable as the US dollar. No one thinks that, but its use case and its narrative, it keeps evolving. And I think it will keep evolving to cope with different needs.
Okay, all right. So now we're speaking about events. Will there be growth in value for BTC after the halving? Who wants to take that on, Ian? I see you have that smirk right now, Ian. I see that.
So I'm laughing for two reasons. One, from the question, but two, the guys just showed up to cut my grass, and so they're blowing the grass outside, and it's really loud. So I'm trying to mute. Anyway, do you mind repeating the question? What's going to happen with Bitcoin after the halving? Is that correct?
Yes, sir. Will there be growth in value?
I mean, this is not financial advice, but it's going up. It's going up. I think it's gonna take time, right? I think, listen, BTC, there's still some big whales that I think influence the market, and I think usually what happens, just in my experience, is the majority of people think it's going one way, and then the opposite happens. But I do think long term, by the end of the year, we're going to see a much higher value on BTC than it is today. I'm actually a really big fan of Plan B, which is 100 trillion USD on Twitter, and his stock to flow ratio. I'm a big believer in that, but again, just my own opinion, and I'm not a very smart person, so I could be wrong, but we'll see.
Well, never financial advice. Yeah, never financial advice for sure.
Don't listen.
But yeah, I definitely think it's going to go up in value. I mean, it has to. It's scarce, right? It's built into the code. There's only 21 million of them forever. I understand institutions can play games and create ETFs and things like that, but at the end of the day, there's only 21 million of them. As more and more people adopt it, it has to go up. After the halving, miners are going to be paid half as much to do the same or more work. So, I mean, just all these correlating events, you would think that it would have to go up in value. That's kind of my take on it. I could be wrong too, just like Ian said.
My take is very much the same. I think long term, due to the financial fundamentals and the model it was built upon, it will go up. Again, this is not financial advice, guys. Do it at your own risk, but it's something that I profoundly believe, and something that anyone can look at financial fundamentals and see that this is absolutely the case. If you compare it with traditional fiat currencies, and where we see printing money all the time, new financial stimulus, quantitative easing, call it what you like, the fundamentals are completely different. You have inflation, you have different fundamental economics at play. In the realm of crypto assets, I look at the story of Bitcoin and the core value proposition, and I see, and a lot of companies, individuals see solid fundamentals long term. And the halving, well, we don't know if it will go up right after, or 6 months before, or looking at historical data 1 year afterwards. We don't know the timings, but we know that due to its fundamentals, it has all the requirements to go up.
Okay. Here's a question from the audience. Gentlemen, how can blockchain innovators and entrepreneurs provide hope for a post-COVID-19 future? How do we communicate hope and opportunity while remaining aware of the human element? Once again, this is the question that they went.
Dude, that's deep. It's deep.
It's the people are tuning in because they want to hear from the leaders inside that field, and we understand what each other are going through, but maybe not on a day-to-day basis. So I'd love to hear the audience wants to hear that.
Can you repeat it again for everybody? Because it was a long question. Yeah.
Well, very, very long. Hold on 2 seconds, 2 parts. How can blockchain innovators and entrepreneurs provide hope for a post-COVID-19 future? How do we communicate hope and opportunity while remaining aware of the human element?
It's a good question.
I'll take a stab at it.
Lead you.
I would just say that if you're passionate about blockchain or the crypto space or whatever it is, and you can have an impact and you want to build a company, just find a solution, right? And just start building, just start doing stuff. I mean, I think the thing is a lot of people want to get involved in doing something in the blockchain space or start a company or just have some kind of level of influence. And I think you need to just get out there and start solving problems. I mean, in my opinion, people always gravitate towards technology that makes their lives better, faster, easier. And a lot of times people don't care so much about, how it happens, just as long as it, like I said, makes their lives better. If you could communicate that in a very simple manner as to how, crypto is as a fundamental asset, is a great store of value, or how it makes, cross-border remittance even quicker, that's what I think is what is most important. And I mean, listen, the reality is that, in the US, you got 22 million people unemployed. It's a really scary time for a lot of people. And so in my opinion, I would focus more on not, what can crypto do as a store value, even though I think we all kind of have a consensus here that it is going up, but really more or less how can this technology at just a protocol level really make your lives better? And again, I think there's not a one size fits all answer is probably the best way to put it.
Yeah, there's a lot there for sure. One of the things that I would have to say, I mean, is I think we all can agree digital cash, blockchain, crypto, whatever you want to call it, is the way of the future. I mean, even if you look at the PPP, you look at the new CARES Act, they talk about creating a digital money, right? So it talks about it in there. If you look at all these big corporations, they've all embraced blockchain. They're either coming out with their own or already have one. They're using it. We know this is coming. We know that there's going to be a digital dollar. We know that all this is coming. We know cash is going away. And so that creates a lot of opportunities. And if this person is really passionate, what's that?
No, I'm saying I'm glad you actually mentioned the opportunities. I want to talk about the other altcoin opportunities while you're discussing that.
Oh, sure. Yeah. And so for people that are passionate about blockchain, for somebody that sees a need that they can fill, not just something that it's a hobby, something they want to do, they probably won't be successful that way. But if they find a genuine need that can help the masses and they're passionate about it and they go about an inch deep, I guess about an inch wide, about a mile deep, and they become an expert in that sector or whatever space they're trying to fill that need, they could be successful. And I think this is going to change people forever, the way they interact with people, the way they spend money. And so, as awful as that is, it also, again, adds opportunities. And so for people that start seeing how blockchain's adopted, they start seeing these big corporations adopting it, they start seeing this digital money, they'll start seeing other ways to where they can interact and add value. And that's how I think they can start making money. Unfortunately, cryptocurrency right now is mostly just for speculation. We're not seeing a really high use case in cryptocurrency for daily items and goods. You're seeing credit cards and checks. And why? Well, because it's easier. They understand it. They can wrap their minds around it, right? So as long as we still have this complicated thing called blockchain that's still clunky and still requires people to understand that to send an ERC20 token, you need to have Ethereum. And when it still has all these layers of complexity to it, these roadblocks, it's going to be difficult. So for the people that figure out ways to make it easier, to make it better than what they're using right now, there's immense opportunities because this whole world is changing because of this. And it's going to be there's going to be a lot of opportunities for people.
Yeah, like Robert said, it's all about the technology and the user experience. And for the people at home who are thinking of diving into this ecosystem, I think this is a great moment since we are spending more time or all of our time at home. We have time to introspect, to really think about the core issues in our life. Now that we communicate primarily electronically, it actually forces to think of money also not as the cash that we have in our pockets, in the car that we use in the store every day, but as a digital abstraction as well. So, and that leads you to think, or I wish to believe that, okay, so what is this digital abstraction that I use every day? And how can blockchain play a part in this? And that will, if you're curious, an entrepreneur will lead you to more and more questions. And you end up thinking, damn, I should be doing and contributing to solve a problem that still exists. And trust me, there's still a lot of problems to be solved, and either in technology or the world in general. So it's always a good moment to start introspecting and thinking, how can I solve this fundamental problem in the world? Be it in technology, be it in blockchain, and whatever you desire. if it's a case of blockchain, just, due diligence, start understanding the core technical aspects if you want to do something in that area, and then think of what exists today, what they do, and how can you add value to all of this equation, and how can you reach out to more persons and for them to understand or facilitate that onboarding or understanding so that they can also be part of this global ecosystem.
I'll tell you, man, when we started Ternio, it was, it's an emotional roller coaster. And I think anybody who, starts a company, it's an emotional roller coaster of ups and downs. But I think, the crypto space is unique that it's 24/7 and it's always moving and it's very quickly innovating. And, the one thing that seemed to work for us is that we're just, we're not the smartest guys in the room, but, we're really persistent and we're really, really passionate about what we're building. And I think that's what really kind of gets you through those lows and those dark times when you want to have an impact that, maybe building your own company. You got to have passion, right? You got to make sure that progress oftentimes is 2 steps forward, 1 step back. But as long as you're making that incremental progress, you're on the right track. And honestly, too, for some people, they don't want to be an entrepreneur, right? They don't want to start their own company. Maybe they want to get involved. And I would recommend anybody, if you see a company that is in the space, right? You see Utrust, you see Monarch, go out there, talk to those guys. And maybe join their team, maybe help out in some capacity, because a lot of companies in the space that do have products, we're all so early, and we need a lot of talent to really join us and make it better. And I'm a big believer that a rising tide lifts all ships, right? This isn't a zero-sum game, and there's so much blue ocean out there that people often forget that, right? It's we treat crypto assets like sports teams, and that's not the way to be doing it. Anyway, I digress.
No problem at all. So we have a lot of questions here. I'm going to get to a few questions. One, we have thoughts on coins like Tezos, Litecoin. They want to speak about if you can give your opinion on any oil coins, oil-related coins. These are the questions that are popping up, gentlemen, and I want to make sure that our attendees are addressed accordingly. So, so would anyone care to address the question of your thoughts on altcoins and an opportunity in the COVID-19 pandemic?
Yeah, so I guess I can start off here. I mean, so when you're looking at things like Tezos and Litecoin, again, people are looking at, or even an oil coin of sorts, people are looking at these as, speculative assets, I guess, of sorts, right? They're betting on them like stocks. Whereas that's great, but I think for cryptocurrency to take off, they're going to have to use stable coins and stable tokens, because that's where the true use case for cryptocurrency comes in. Because think about it, if you're a merchant and you get paid in Bitcoin, right? And then it drops 55% the next day, how do you make payroll? How do you pay for your bills? Whereas stable coins and stable tokens allows you to do that. And you have to be very careful too. I mean, when you start talking about these oil-backed tokens or gold-backed tokens or silver-backed tokens, how do you know it's actually there? How do you know it's not some exit scam? How do you know that, the real commodity, the real asset that they're saying is there really is there? This is still a very new, it's still very dangerous. I mean, I understand Litecoin's been around for a long time. Tezos appears to be backed well. Maybe you won't get burned. I don't know. But, there's a lot that goes into investing. And, some of these asset-backed cryptos are really terrifying because they could say that they haven't. I mean, think about it. It could be like the US dollar, where everybody thought it was backed by gold, but it hasn't been since 71, right? And so you go to turn in your dollar, and what do you get for it? You get another dollar. You get 4 quarters, right? But it ain't gold,
paper.
Right? Yeah. So it's scary stuff, man. And I know you can make money in crypto, but I would say most of the time you're going to lose it. So the best idea, I think, for people to really start adopting crypto is to start utilizing stable coins and stable tokens that are backed by something. And we really don't have any out there yet that we can really trust 100% anyways. I mean, look at Tether, right? They say that's backed by, dollars, and then, well, is it? I don't know. So we're kind of at this, we're still, we're still finding our way through all of this stuff. And yeah, you'll be able to make some money, but there's a bigger chance you're going to end up losing it. Sorry to be a pessimist.
No.
I would say Beadles, you're absolutely right? Like Tether is the most traded crypto asset, right? And it's the kind of thing where people, they like crypto for the quick payments and things like that, but people in the masses, I should say, really are uncomfortable with volatility. Nobody likes seeing their balance go down, whether it's BTC or some altcoin. What I will say is, with any altcoin, if it were me and I was just getting into space, I would really focus on the companies with products, right? A real use case. There's 2,000 coins out there on CoinMarketCap. I think, unfortunately, all of us are guilty. When you hear about a new coin, what's the first thing you do? You go to CoinMarketCap and you say, oh my God, it's ranked, 500, right? And so this is not interesting to me. There's nothing here. And oftentimes that's not correct. It's, it's a scoreboard of sorts, but it's not an accurate reflection of a lot of companies that are out there building something real. And, honestly too, a lot of companies who are smart, I think, are conserving money, and they're not maybe playing the exchange game right now, because that is something that's kind of a dirty secret of the crypto space that most people don't know about. What I will say is that, things like Litecoin, and what I will say too, just as an aside, like the Litecoin card is coming. Ternio is actually going to be powering that and making that all possible. So anybody who's curious, it's still happening. Things take time, but it's coming. And, Block Card, we use our own altcoin on Block Card, right? You spend Tern on the card itself. You get your rewards, right? Up to 6% back, unlimited on everything you spend on Block Card in Tern. But it's an altcoin, right? It's number 500 something on CoinMarketCap. And oftentimes people, you hear about Ternio, you're like, never heard of this company before. What do they have? Oh my God. Crypto Visa card, works with Apple Pay, cool rewards. They're powering, these other cards on these companies. But it's the reality of the space today. And so, like I said, focus on utility, focus on teams that are transparent, that have a real use case. And if you are going to get involved, start small. Right, like I said, you can put in $20, $30 and put your dip your toe in the water, but don't go in there gambling. And unfortunately, I see a lot of people that are kind of gambling on altcoins for short-term gains. I think you're probably playing long-term when you're in alts.
I was going to tackle the cryptocurrency backed by oil because I actually wrote an article last year about how the Arab countries could actually launch their own stable coin to compete with DCEP, China's upcoming stable coin, and the future e-dollar or electronic dollar or whatever the initiative is called in the future. And the way they could do it, those countries could form a coalition to actually emit a currency that is backed by their oil reserves on the blockchain. And that actually has very solid fundamentals in place. So if everyone is interested in how that would work in economic terms, you're free to check it. But it's something that it's definitely possible. I don't see a company being able to do it because of what Robert said. How do you assure that the actual currency is backed by the oil reserve, which, by the way, is a problem in any crypto asset that is backed by a commodity, but is definitely possible if it's done at a high level state level. But I do think that's going to happen in the next decade, by the way.
All right. Let's take a little flip of the switch real quick, and let's talk about nonprofit organizations and how could blockchain and cryptocurrency impact on nonprofit organizations during and after this pandemic? How can that affect nonprofits? How can your blockchain, how could each one of your applications help nonprofits during this time?
Sure. Can you imagine the transparency, man? Can you imagine if you actually gave a Bitcoin or a Satoshi to the Red Cross or to any of these charitable places, and you actually know that it goes there? I mean, you've heard, and I don't want to go down the conspiracy theory rabbit hole, but you hear about all this money that goes to like the Clinton Foundation, right? That was supposed to go to Haiti, but they ended up getting all the money. Well, that's really difficult to do if it's going to be done on a blockchain, right? It's going to be very difficult to do, the laundering and the misallocation of funds, because you're actually going to be able to see the money go from A to B and make sure the person that needs it gets it. And with all of our technologies here, I mean, with Monarch, you're the monarch of your money, right? So they, for free, could download a wallet and be able to take their money with them anywhere in the world and spend it however they see fit, without ever having to worry about somebody taking it from them or charging them crazy fees or that kind of stuff. Same thing with merchants. If they're, a 501c3 and they're trying to save as much money as they can, if they started using stable coins and stable tokens, they would be able to pay less than 1% in fees and never have to worry about them not getting the money or getting locked out of their money like you see on PayPal. You see PayPal, they'll lock up these 501c3s monies. They'll say, hey, we don't think that you're a charitable foundation or whatnot. Then that money gets frozen. So you have to worry about the misallocation of funds, the laundering of funds, then these platforms locking you out of your money. And so with blockchain and crypto and products like everybody up here has, that's a thing of the past. Now they have ways to safeguard themselves in the future.
No, it's a great point. Accountability, really, right, is what it comes down to. And as you said, Beadles, like a lot of these CEOs at these nonprofits are doing really well. They're doing really, really well. And it's kind of like, well, who's funding that? On the crypto side, we have Block Card. Whenever we test like a new feature on Block Card or something like that, we make donations to Red Cross or water.org, or just, pick whatever's, you're passionate about and it's important to you. But I think, the real holy grail is blockchain, just at the protocol level, to really kind of say, all right, we're raising $100 million because we need 20 million here, 30 there, and then really being able to kind of see where that goes and how does that money actually trickle down from the person who's making the donations through that organization to the person. And Haiti's a great example of kind of, I think how maybe the ball was dropped, or at least how there wasn't transparency. And so from the outside looking in, it doesn't look great.
Yeah,
I think the Clintons did well.
Yeah, from our perspective, we do serve ONGs and as well. As a merchant, we see a really interesting value proposition right now, because a lot of the fundraising that was perhaps traditionally done by offline channels is also migrating in times of COVID-19 to the web. So a lot of those organizations also have to adapt to collect their funds or to accept new forms of digital native payments on the web. If you think about that perspective, it's something that they can leverage as well to increase their funding. Of course, there's the added benefit of transparency that Robert and Ian mentioned, and I think that's great as well. So it's like a triple advantage for non-governmental organizations that want to increase the amount of reach, the funding that can collect, and of course be more transparent at the same time with their source of funding.
Oh, we have a lot of crude questions, crude futures contracts. We have, let's take this next question, government restrictions. Robert, I know you love to speak about this. In the pandemic, at the time of the pandemic, what government restriction would you like to see alleviated so that we could make e-payments a lot more efficient to the end consumer, the end user?
Man, so there's so many things here, but I would say that the number one thing that I'd like to see as far as government restrictions, actually it'd be a little bit different. It'd be the IRS. It would be taxes, the amount that they take from every American to basically be a complete reform. Something like a 10% flat tax is something that I've always talked about that I think is extremely fair and would put so much more money in people's pockets. So it doesn't matter if you make $1,000 a year or $1 trillion a year, you'll pay 10% in taxes. Because right now with people, they don't understand, especially like in places like California, like 60, 70% of their money that they make is going to taxes in one form or another. They don't realize that they're working anywhere between 5 to 7 months out of the year just to pay Uncle Sam. They don't realize how enslaved they've become because of taxes and how much more freedom, how much more life they could have if they weren't getting up every day working for Uncle Sam when they were just shown he can print as much money as he frickin' wants. So if he can print, $6 trillion, why do we need to pay taxes, right?
I have an answer to that, Robert.
Yeah. So this is a very, simple question, right? I understand you need to pay taxes, because you need, certain government services. You need to take care of the roads, the police, the fire, all that type of stuff. I understand there's a need for that, but we don't need to pay so much in taxes. So if we would have, a 10% flat tax, I think that would translate to crypto. I think that would translate to every single industry and every single person in the United States.
Robert, you're absolutely right. I think taxation, especially in the US for crypto and non-crypto, is something that definitely we need a revamp. Especially when you think about crypto taxation in the US, where every single transaction is taxed, or according to the IRS, it doesn't make any sense, because crypto assets can represent different instruments, and again, they should be taxed differently because they are not the same thing. And replying to your question, I'm sure you already know that, but I agree with you. Like the US government, they can imprint as much money as they can, and they have pretty much unlimited money with the power of the keyboard. And your taxes are not actually a way to fund things. The government can fund whatever they want through just a few keystrokes and allocating money on their system. The taxes is actually part of the process of destroying money or taking money away from the economy. So the government can actually control the amount of inflation or deflation that occurs in the economy. And that's an important step of this whole modern economic system, to take away or have avenues to take away money from the economy. Otherwise, if you keep printing and you don't have outlets to take it away, inflation just goes through the roof.
Yeah.
Yeah.
I would agree with what both you guys are saying. I think the way Switzerland, is it Switzerland? I believe so. That the way they're looking at it, where they're kind of putting any kind of crypto asset into three categories, right? Which is either a currency, a commodity, or a security, right? And so it's kind of thing where like, all right, if you have capital gains, right? If you bought a security on the blockchain and you did really well, sure, you should pay capital gains tax. And I understand how that kind of applies to the current law. But for something like a currency, right, where it's meant for small micro payments, tipping, you shouldn't be paying 40% short-term capital gains. It makes no sense. And it's kind of, I think about it is like, all right, let's say, when the internet came out, if every time you clicked onto a new web page, you paid some kind of toll or some kind of tax to get the value of more information, it wouldn't make any sense, right? And it kind of hinders the progress that's being made. And so, like all things, it's usually, technology gets there first, and then the laws have to catch up. And I do think, listen, I don't think the government is saying, at least the U.S. government saying, hey, we want to stifle innovation and we want to kind of, force companies outside of the U.S. in order to innovate. Laws are there and regulations are there to protect people. I just think that unfortunately they're not there today. And I think there's a lot of smart people in this space who are actually advocating for educating their local governments, the federal government, in order to kind of bring that knowledge to them. And, I think in the coming years, we'll get to a good common ground.
Could you imagine just a one-page tax bill where it just says basically everybody pays 10%?
That's crazy. That's crazy. We're not doing that. That's crazy.
Takes all the guesswork out of everything. It'd be incredible. There's a lot of theories out there on what Trump's doing right now, and I don't want to again dive down the conspiracy rabbit hole, but I just hope he's smart enough that he's doing what a lot of people out there say he's doing, and he's going to end up with the Fed holding the bag, bankrupt them. They're stuck with all the debt, and the people basically get this. I don't know. They get everything forgiven. They get a bunch of free money, and then there's another currency that's reintroduced that's backed by gold. It's this theory that's out there. I don't want to dive too deep into it, but it sounds incredible, and that would be awesome if he's doing it.
So, Robert, I would agree with you that would be possible. Unfortunately, if you look at recent reports from gold experts, they say there's very little trace amounts of the original amount of gold that was actually in the U.S. vaults. So a currency, if you wanted to introduce it backed by gold, that wouldn't be possible because the biggest buyer of gold has been China in the past decades. So you have to buy all the gold to China or to buy it back at a certain price to have currency backed by that. So wouldn't work for that.
Yeah,
reason.
no, that would just be one of the things in the basket. So you could have gold, silver, palladium, corporate stocks. Right? Bonds, all these assets that would allow them to have a tangible currency with assets actually backing it. People that could actually know that there's stuff there. I don't know if it's happening. It's just one of the things that are out there. And when you're on the internet, you can find pretty much anything you're looking for out there.
It's absolutely possible. It's absolutely possible if we want to have I think the initial concept of Libra, even they wanted to have different currencies that were part of the basket to balance it out. But, for regulatory reasons, they had a lot of pushback. They couldn't do it. So, in theory, we could do something like that. New US dollar backed by a basket of commodities or stocks. It's pretty much in the realm of possibility. A single one, no, but a composite, absolutely. It will just have to have a lot of will from political powers to actually implement that.
You were speaking about, we have a coin about the SDR basket. Are the SDR basket dig currencies a threat for BTC?
I would say no. So the SDR basket, the currencies that are actually part of the SDR basket, they're not proportional to the size of their respective economies. If that was true, China's currency would have a lot more weight in the basket as it is now, and the same for other modern economies. So the basket doesn't actually correlate to the contribution of different GDPs. And it's a way for basically balancing out international settlements between different international financial institutions. It's not something that it's even used at your local bank. It's not on the same realm as a new Chinese backed digital currency, a new US dollar, or their cryptocurrency counterparts. It's something completely different, and it's used for different economic purposes. So I don't think it will be comparable.
The WTI, this popped up. It's pretty interesting. WTI crude May 20 futures contracts traded negative 35 yesterday for the first time in history. How would a blockchain-based settlement solution improve this liquidity crisis? Who would like to take that one on? You want me to repeat the question?
I just know from a futures contract standpoint, I'm not smart enough to really have an opinion on this question. So I'm going to defer to both guys here that are much smarter than me on this.
I mean, it's volatility, right? I mean, if you put certain parameters into a blockchain, you could prevent black swan events for sure, but then it's not a true market. So I think you're always going to have something like this can happen unless you put restrictions in place to keep the blockchain from, these black swan events. I don't see any way around it unless you don't want a true market economy. If you don't want something that's true, you want something that's confined, then you can do it.
Yeah, it's a trade-off. So if you want something that is volatile, can go up and down freely, you have a free market, sure, you can have it, but you're subject to black swans events like this one, and certainly others in the future. It's part of what we have. Or you can have a more restricted system with, something that prevents you from trading at a certain level. But would you use such a system? Will it be widely adopted? Well, it's up for debate. It's what we want.
Okay. And I have a pretty interesting comment here about technology and the adoption of NFC and crypto. With what we're having in the time of the crisis, do we see it as a good time, an ideal time, and I don't want to say ideal in a negative way, a positive way, just is it the time that we have the cross-section of those right now?
I think there's been a lot out there, right, where paper fiat money is dirty and it can transmit the virus, right? So do things like NFC readers, and where you can kind of tap your card and move on. Does that prevent contact? Sure, absolutely. Things like Apple Pay, Google Pay, Samsung Pay, I mean, those are really, really important as well. I think what it comes down to ultimately is convenience, right? People will always default back to what's familiar with them unless you can provide them a better experience, right? And so, I'll use the example of again, like Block Card, right? We sync that with Apple and Google Pay. So if you want to literally pay with crypto at a point of sale machine and they don't accept crypto directly, well, you can actually just go and tap and move on. But at the end of the day, for a while in the US, credit cards are the most used payment device. Second is cash, right? And so when you use that card as a vehicle, well, doing the kind of chip and pin system where you got to stick it in, you got to wait 6 or 7 seconds, maybe it goes through. It's not a great experience, right? You're in line, you got people waiting for you, they're looking at you. You want something that's like quick and you're going to be able to move through. And I do think things like NFC and Apple Pay are going to be, they're going to be widely adopted. I think right now you still have a lot of actual physical cards themselves that don't have that technology. So people they haven't made that transition, right? Because they don't see the capability. But I think in time, absolutely. And I think with a lot of the measures that merchants are taking in terms of social distancing and having clear plexiglass at the checkout counter and saying, hey, we're not accepting cash, only use the point of sale machine. I think it's going to force people into kind of forming those new habits.
Okay.
Yeah.
I'm going to actually to wrap this last piece up, gentlemen. Believe it or not, that's almost the time. I think we may need to extend this because there are a lot of questions. Attendees, we're actually going to answer your questions in a follow-up, so make sure you log on to Cointelegraph. We will have a follow-up to a lot of the questions on there. I'm reaching out to the panelists to make sure they provide the answers. There are specific questions for each one of you, gentlemen. So again, thank you so much. I know we're trying to handle a lot in a very short span of time right now, but one of the last general questions for a little bit of advice is, how will COVID change people's way of interacting with e-payments? A little summary and, a 30, 45-second summary. And we'll wrap it up there. You're ready for our next panel on the digital dollar.
Sure. So digital money is the way of the future, period. It doesn't matter what kind of platform people are using. That's what people are going to start using. You're going to see cash. It's going to be just phased out. And because of this, none of us are ever going to be the same. You know what I mean? For better, for worse, whether people are washing their hands more, now they're cleaner, right? Well, but they're not going to be using cash. They're going to be using digital payment methods. So there's absolutely just this revolution coming where people, you see credit cards being used a lot. Well, you're going to see Bump Pay, Google Pay, everything that Ian was just talking about. That's going to be the new way of life here shortly. So get ready for it, peeps.
Yeah, online payment in a truly universal scale. So for now, what we've seen in the past, especially in cryptocurrency payments, there were a few missing elements. One, it aligned primarily with a certain demographic, younger people, technological savvy people. They were the first ones to join the ecosystem. But now, since a lot of people, especially the older generation, are pushed to the online channel, they are forced to this online reality and online everything. So the physicality of the old money, it's going away. Like Robert said, like it's part of the natural process. But this incident is actually speeding up a lot of things and also forcing a lot of businesses to shift their strategy to the online. So it's going to be online, 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 even for businesses that traditionally didn't focus a lot on that channel. They had a more omni-channel strategy, but now in the next year, you're going to see an extreme focus on online, an extreme focus on how can I leverage that channel and how can I leverage payment options on that channel. And cryptocurrency with what we have today in terms of crypto, new stable coins, it's going to be part of that future.
All right, thank you. Ian, wrapping it up.
I agree wholeheartedly. I mean, I don't think I can say it any better than what those guys already said. For me, I would say anybody who's in the crypto space today, I mean, do your part, help educate people. We all know, everybody who's here today, everybody who's watching, we all know crypto is way more convenient in terms of cross-border payments or paying at your local gas station if you have, a card of some kind that accepts it. But it's really, you need to educate others, right? Because again, it comes down to convenience. And again, I'm a firm believer that at the end of the day, everybody understands how to use a debit card. Everybody can learn how to use a wallet of some kind, and you don't have to confuse them with the details. Just make a really cool product that's simple, that's easy to use to collect some kind of store value and exchange it for another store value. And it's gonna catch on. And I think it's nascent technology. We're still in the early days, even though we're 10 years in. But it's gonna change the world, and it's exciting to watch.
All right. Well, I'm glad to be in absolute fantastic company with the three of you gentlemen as we look to revolutionize this whole economy that we have right now. Thank you so much for taking the time out in this crazy world once again. And we'll follow up with a lot of the questions that the attendees have. So, gentlemen, please be safe. Thank you so much once again on behalf of myself and the Cointelegraph team. Attendees, please understand that we will have more Q&A. We have a second panel with the digital dollar coming up shortly. And thank you so much for tuning in for the e-payments panel. Take care, guys.
YouTube stream, but I think that should be resolved momentarily. All right, so I hope you all enjoyed our first panel. That was excellent discussion with Stephen Chase and a host of great panelists. And now we're going to be talking about the digital dollar. So this has been a concept that's been kicking around for quite a while, especially when central bank digital currencies have been picking up around the world. But considering the current COVID-19 crisis, initially people were talking about a digital dollar to replace cash, which has been known as a vector for disease. And then it actually appeared in recent legislation to distribute stimulus. That has gotten everybody talking about a digital dollar, even people who are completely new to crypto. However, those of us who have been monitoring the field for a while are still curious. We still have a lot of questions. We don't know whether this will be realistic for COVID-19 aid. We don't know whether digital dollar as proposed in the stimulus package and subsequent bills even qualifies as crypto. And we don't know whether it'll replace crypto, will replace cash, and we don't know how it'll affect America's role in the financial world and the technological world. So joining me today, we've got three amazing panelists to discuss these topics. So firstly, we've got Catherine Coley, who is currently CEO at Binance's American wing, Binance US. Since Binance Global left the US last year due to regulation issues, Binance US has been spearheading initiatives within the United States. Catherine is formerly head of institutional liquidity at Ripple and has worked on exchanges in London, Hong Kong, and San Francisco. So Catherine, how about you?
Thank you. Excited to be here. This is something we talked about in op-ed just at the start of my quarantine when discussing kind of how we would look at sending stimulus checks in a different way. So that's kind of where I see this as a relevant discussion, and one that as a, leading a marketplace, we're interested in how we can get funds to users. And that's really where we build our infrastructure to be able to handle that.
Amazing. And then Adam Trademan joining us from Tokyo right now. So thank you very much for the early hours. Adam is the CEO and co-founder of BRD, which is formerly known as Bread Wallet, which was an earlier non-custodial wallet designed for designed for the average user. More recently, he has also joined SPI's mining chip manufacturer as CEO, and I believe he formerly worked at NASA, if LinkedIn does not lie to me.
Thanks, Colin. That's right. It doesn't lie to you. I've been in the Silicon Valley for about 20 years as a serial entrepreneur, originally an ASIC designer. Actually, I firmly believe that the situation globally with coronavirus and the potential for the digital US dollar or other national digital currencies, by far the most impactful thing that has ever happened in the crypto industry. I look forward to talking about that today, because as you accurately portrayed the difference between crypto and digital assets, there's definitely something there when it comes to national currency coins. However, I still think that this is a huge opportunity for the crypto industry. So looking forward to it.
Absolutely. Great. Thank you for joining us. And then Morgan Ricks joins us from Vanderbilt Law, where he's been faculty since 2012. He was formerly an advisor to the U.S. Treasury, where he specialized in monetary policy. He's authored the book, The Money Problem, Rethinking Financial Regulation, as well as topics such as money as infrastructure. And more recently, and very relevantly, was the lead author on a paper proposing Fed accounts, which initially published in 2018, but has ended up really influencing recent legislation. So Morgan.
Yeah, that's right. So I'm, as Colin mentioned, I'm a law professor at Vanderbilt, worked at Treasury Department in the financial crisis, doing bailouty stuff in the last go round, and before that had a background in financial markets and investment banking. And as Colin mentioned, I co-authored a paper 2 years ago now on digital dollars by way of what we call Fed accounts maintained at the central bank in the U.S. That will be at the Federal Reserve. And my co-authors and I think there would be some pretty astonishing benefits and advantages to rolling something like this out, although we also acknowledge that there are some drawbacks.
Amazing. I'm glad we have such a solid panel with such different expertises with us. So I'd like to go to you first, Morgan. So regarding both the paper as you wrote it in 2018 and how has it picked up attention later on, really in the past couple of months, I believe that legislators and their staffers reached out to you regarding that. Could you kind of give us the history of your interactions with legislators on the subject?
Yeah, so we wrote the paper again back in 2018. At the time we released it, we did some Hill outreach on both the Senate side and the House side with Capitol Hill staff. Also did a lot of work speaking with think tanks in the financial regulatory space and some advocacy organizations around financial reform that were interested in it. And so that was really, I guess, 2 summers ago. And interest has continued to sort of percolate, and we've had sort of periodic discussions with various people in Washington at various times over the past couple of years. But yeah, it was a few weeks ago with the as the stimulus legislation or emergency response legislation was in the meat grinder. The sausage making factory on Capitol Hill, we got a lot of inbound inquiries about this as a mechanism to distribute stimulus dollars, and we helped out with some of the legislative text on that, and it did not make it into legislation, but I think it generated a lot of interest among some members of Congress and other people in the policy world. So it sort of continues to be an issue people are talking about.
Absolutely. This does kind of tie into a broader topic of stablecoins, which have been, really controversial. And I'd actually like to turn to Catherine here for a moment, because you wrote that op-ed that advocated stablecoins, I suppose currently existing ones operating via private sector, as distributing stimulus payments rather than a digital dollar. Could you give me kind of a breakdown of your logic and your comparison there.
Sure. When we're looking at kind of the crisis that we had at hand, how we would be able to distribute these funds instantaneously, preparing a network that would allow this to take place doesn't happen overnight. So I was looking more internally with what we had in our systems already that would give us this access faster, or as an alternative to direct debit or even sending paper checks. So that's where we were looking at, okay, there's a way for us to onboard US citizens, be able to get them accounts that would allow them to receive digital forms of US dollars through stable coins in a way that they'd be able to send it back to their bank accounts or into the digital markets or through other means that they decide on. But when we're looking through it, we were kind of going, all right, we've spent 10 years building technology since the last financial crisis. What of that have we built? Are we able to use?
Absolutely. Absolutely. Adam, what are your thoughts about how effectively they'd be able to distribute both in general and for this crisis in particular?
Yeah, I think it's all about the user experience. I'm actually less concerned with the mechanism for distribution and far more concerned with the mechanism for individuals to be able to hold the digital asset and then to utilize the digital asset. That is, realistically, for anything to take mass adoption, and certainly money is a great incentive for people to adopt technology, in order to receive that money. But in order for that to happen, it's got to be as easy to use as your physical wallet that's sitting in your pocket right now. And, and if it isn't, then what happens is that the effect of the stimulus payment is mitigated dramatically, right? And we need to step back a moment outside of our industry, outside of technology, and say, what is the goal of what the government is doing here, right? It's to help people get through these difficult times. The mechanism to do that should not be something that gets in the way of it. The mechanism to do that should be something that makes it even easier, right? And that's why for, what's going on right now with just a automated ACH transfer into IRS labeled checking accounts, that individuals were paying or receiving their taxes in, probably was the best mechanism for folks, or to have a physical check cut if they don't have an account on file with the IRS. So when you look at, putting something into a digital asset and having it come through that mechanism, the goal of that, by the way, and the entire reason, at least in my opinion, why this was in the stimulus bill initially, it was not to facilitate ease of distribution. I don't believe, Morgan, correct me if I'm wrong, but I think it is more about contactless payment. It's about less physical touch. It's about spread of the virus. So if you look at sort of the overarching goals, right, how can the technology support that? Right. So it's less about, how we can all benefit and how the crypto industry can benefit. It's more about how to help people and what the overall goal is of the government in providing the funds.
Well, there are people who would say that currently digital dollar exists. Your dollar, a lot of it never reaches you in a cash form. Your dollar just behaves as a matter of like digits floating through the ether. What are the limits to what we currently have? And how would a digital dollar be an improvement?
I guess that's
You're absolutely right.
Yeah. Do we want this to be a digital dollar? Do we want this to be a digital dollar, or do we want it to be an encrypted dollar? That becomes a kind of the difference in the argument.
I wish that we could ask that question and give our answers and have them heard, but maybe the more appropriate question is, what does the US government want, right? And they don't, they from their perspective, right, adopting a digital currency or digital asset-based currency has several obvious benefits, right? Mitigation of physical cash, or like they're doing in India and in many other countries, dramatically reduces money laundering. I mean, the physical US dollar, Benjamin Franklin's, if you will, right, are by far the number one tool of terrorists and arms dealers and, anyone who's basically conducting illicit activities, right? And so there's an obvious benefit there. The second one is, of course, being online or being fully digital. They can track it even better than they can today with, the U.S. Banking system, right? So make sure we pay our taxes and, make sure money's not flowing into places where they don't think it should be, et cetera. The notion of cryptocurrency or encryption or something like that, I don't think it would be introduced in these concepts in any way to benefit the end user. Right? It would be perhaps introduced in ways to benefit the central authority that wants to ensure that they have full control. The digital RMB is a perfect example of this. If you read the documentation that's online, they seem to imply it's a little bit of blockchain, there's a little bit of this, it's like crypto or it isn't, right? Well, the bottom line is this: they control it 100%. It's centralized. And it's going to be, something that is not going to be an optional thing. It's going to be, adopted by everyone because it will be the new currency of China. And so I think if you look at that model, that's probably the model or something similar to it that we would see adopted in other places like the US.
And Morgan, what do you feel about that? What do you think about what you were initially proposing in the Fed accounts?
Yeah, well, so when we think about the government, it's not an it, it's a they, right? And so what the way that legislators think about it, and the way that Fed staff and Fed board members think about it, might be very different things. The topic of central bank digital currency, has been around for a number of years, but really got a liftoff with the Libra announcement that lit a fire. That's Jay Powell's words. He said it lit a fire under all of us. Think about what our role is. The Fed's been doing the same things now for really 110 years, right? It issues physical currency and then it maintains accounts, but those accounts are reserved to an exclusive clientele. They're basically banks and the federal government itself, but banks. And so the question that arises from that is whether it makes sense to evolve, and if so, how. And one way of evolving is not technological, it's merely institutional, right? Why do we have privileged access to this particular asset, which, by the way, is a really desirable asset? I mean, accounts at the central bank are amazing. They pay, in normal times, high interest. The payments clear instantly. They're completely non-defaultable, no matter how large the balance. I mean, JP Morgan's bank account balance with the Fed right now is in excess of $100 billion. It's not concerned about needing deposit insurance for that because it's pure money. It's the green account form in digital form. And those accounts, they're extremely valuable. And the question is, should we reserve them to an exclusive clientele, or should we give more open access? Should we give people at least the option to have an account at the central bank? I mean, that was sort of the genesis of our paper, and that's one way of doing digital currency, right? It's not the only way, but when you think about central bank's role in this, that's sort of where you have to start. Is they already offer digital currency? It's called a reserve balance, and every bank in the U.S. has one, and this is how the federal government itself makes and receives payments. So that's one angle for thinking about this, and I think it does raise issues of privacy and civil liberties, and as well as competency and other issues that we have to face when we think about this. But it is one way for central banks like the Federal Reserve specifically to move into the digital age that we think, there's benefits, right? I mean, in terms of what legislators were thinking about, I think it really was about trying to distribute payments to the 7% of U.S. households that don't have a bank account. And physical checks just didn't seem ideal, both from a timing standpoint, when you're doing stimulus, time is of the essence, as well as these households are going to have to go cash those checks. And where are they going to go? They're going to go to check cashing outlets. And in addition to the physical contact involved, you're going to see a percentage point or two skimmed off the top by alternative financial service providers that the rest of us who have direct deposit don't have to deal with that. And so there's a sort of array of policy considerations, and it may be that not everyone has exactly the same one in mind. I mean, honestly, the original impetus for our article, or what got us thinking hard about this, was actually sort of none of the above. We were thinking about financial stability, and dollar-denominated deposit substitutes are the central cause of financial instability and financial crises, and their proliferation has been a big problem. And we were thinking of crowding them out by offering sovereign money. And so there's a stability angle, there's a payment speed and efficiency angle, there's a banking the unbanked angle. In the current crisis, there's a distribution of stimulus angle. There's also an efficacy of monetary policy angle, right? The way the Fed does monetary policy right now is it pays interest to banks on their bank accounts, what we expect them to pass on to everyone else, but it doesn't work so well in practice. And gave a broader set of options for people to have accounts at the central bank. The efficacy of monetary policy would improve. And so I think when you look across the array of considerations, there's a lot of things that point in this direction, but it's certainly not the exclusive or only way one could go about doing digital dollars, but this is one way.
Mm-hmm. Catherine, you look like you wanted to say something.
No, I think a lot of the focus we do have to realize is that those that are more adopting of digital access are ones that are most in need of being able to stimulate this economy again. So we think about it in that way of really focusing less on what maybe existing institutions or existing infrastructure would want going forward, and look at what's really being adopted or been adopted by those that are in most need now.
Mm-hmm.
So that's where we've seen the adoption pick up on our side in the marketplace of increased accounts setting up, realizing that dollar on ramps into digital assets is a lot easier than going to the bank and setting up an account in person, or depositing a check in person. And you can do it from anywhere. You don't have to be, for instance, many of us started quarantining not necessarily at our own homes. So how would you phone back and make sure someone picked up that check for you with a wholesome mentality? So I think that's one of the things we really are keen about, just understanding where digital dollars is taking place. Are we becoming a more global, or at least a more mobile world?
But I mean, regarding the current crisis, I mean, just all three of you, do you think that this will be something that gets implemented while this is still ongoing?
Well, I think the COVID-19, in general, is here to stay until we get a vaccine, right? And that could be anywhere from 6 months to well over a year. So the good news is that the silver lining in all of this is that it's a great motivation to adopt new technologies, right? Such as what we're discussing with a real digital coin or national currency replacement, or just facilitating, as was mentioned, easier on-ramps to get into digital assets for individuals, and reasons to do so, including even individual health reasons, right? If people are trying to avoid contact during payments and whatnot. So can it happen within that time frame? Maybe, maybe not. But what will happen is that it will change the psychology of the general populace, and that's what our ultimate goal, I think, as the crypto industry really has been over the last, however many years it's been since the white paper was published. It's always that pink elephant in the room is, how are we going to get mass adoption? And sometimes, for better or for worse, it takes an event at the global level from a completely unpredictable direction, right? That can actually change mob psychology and can actually get people to move. Because typically, people only will do something if it saves some time, saves some money, or improves their status, right? But the unsaid one there is, right, when it's about health, when it's about the ability for loved ones to mitigate risk in terms of their health, people that we love, right, and hold dear to us, right? That's a hell of a motivator. So irrespective of whether or not we see something in the next stimulus bill come to bear, or we see some future payments made in a more digital form or something of that sort, I think the mindset is here to stay, and that's why I think this is the most impactful thing that's happened in the industry since its inception.
Now, I almost feel bad for the PR person for the actual dollar, because they've had a real bad smear campaign where I'm wiping down Cheez-It boxes before I open them. The moment I get money out of an ATM, I'm certainly wiping it down too, and that's something that we've never done before. So that is true, that a mentality around dirty fiat is now very tangible.
Let me add one thing, Colin, which is you asked about speed and how long it would take, and from a central bank digital currency perspective, which is really where I come at these issues. The Fed, the Fed couldn't do this overnight. It would be at least months of very intensive work, and as you probably have noticed, they have a few other things going on at the Federal Reserve right now. When we spoke with Hill staff about these issues and helped out with some legislative text, the notion that we landed on was, why don't we have member banks of the Federal Reserve System as the sort of retail interface in the first instance to offer accounts on a pass-through basis, and that was the way the legislation was set up until you can get rid of the intermediary, And so, they have the AML, KYC, infrastructure to do this, which if you're going to do an account-based system, with the central bank involved, you're not going to be able to get around that. That's going to be central to what they would insist on from a policy standpoint. And the banks already have that infrastructure. And so our setup was to do it pass through, right? I mean, the Fed it's trivial for the Fed to set up a new account, and they do this all the time, right? Every new bank, they did it recently for a number of institutions that got designated as systemically important financial institutions get access to accounts at the Federal Reserve. So the Fed, it's trivial for them to open a new account for an institution. If they're doing it on a pass-through basis with their own member banks, that's trivial from the Fed standpoint, and from the bank's standpoint, it's also trivial and something they do all the time to open accounts for individuals and businesses. So if you think about it as in the first instance on a pass-through basis, then there's no new technological or administrative or bureaucratic institution building that you need to do. But if over the medium or long term you really wanted the Fed maintaining accounts directly, that's a very heavy lift. They don't deal with retail customers at all. They don't have customer service, and so that's a totally different ballgame for the central bank.
So there's actually. I'm sorry, go ahead.
Yeah, given we can't necessarily control how fast or slow or thoughtful the Fed moves, we're oftentimes taking this time to educate our retail audience. So that's the opportunity we have, is to make people more aware of their financial literacy, make sure that they're crypto literate to the extent that they understand the difference in digitizing something versus encrypting something. Mm-hmm. And so that's really what we're kind of using this slowdown of time to reiterate and go, let's go back to the basics and understand where we came from, how we got here. So that's an opportunity you can take if this isn't going to be action taking place right now, given the difficulty of moving a central bank into the digital era.
Colin, one thing that an observation from my perspective is that if you look at disruptive technologies at an industry level over the past couple of decades, you see things like online music and MP3s, and as a result of the US government engaging companies, technology companies, and other companies in that industry, the incumbents or those that are disrupting, right? You have a result of legislation such as the Digital Millennium Copyright Act, or if you look at companies that have disrupted other traditional markets in more recent time, like Uber or Airbnb, what happens is that disruption begins and kind of upsets the traditional business, right? You've got a collaboration between these often Silicon Valley companies from a tech perspective, and then folks over in Washington, D.C., in the context of basically updating laws and regulations to factor in these new markets and these new things. I think that we as an industry in the crypto space have been somewhat immature. Maybe because of the mentality that has always been the central bank is the enemy, the dollar or the US government, is the enemy. For those who are sort of like Bitcoin maximalists and want to stay true to the, Nakamoto white paper, right? There's sort of this point of demarcation, right? And a line drawn in the sand, if you will. I think it's really important that we as an industry get rid of that entire concept. We need to engage those folks in Washington. We need to offer to help and to take the technology that we have created and figure out how it can be adopted to, accomplish the goals that are being established, given the current situation, and then as things move forward as well. So I'd like to see more collaboration in that sense. And I am happy to say that just since that first draft of the stimulus bill, companies, including ours at BRD, have had folks reaching out, trying to better understand the technology. In our case, we're all about, consumer adoption and UX. And so, I'm glad to say that there have been some discussions that have started where folks want to learn more about how the industry is accomplishing what we have been accomplishing, and use those things as learnings in order to try to accomplish something such as the digital US dollar in a reasonable time frame, not the decade or two that it would probably normally take the government to do such a thing.
Well, this actually brings me to a really good audience question that I absolutely wanted to touch on, which is, what sort of threat does this present to traditional crypto, if any? You seem to be saying that traditional crypto needs to shake that mentality entirely. But
yeah, it's not us against them, right? It's not, if it's an us against them mentality, it's just going to mitigate the overall potential opportunity for crypto companies, in my opinion, right? Instead, if you look at it, is this good for crypto or bad for crypto? I'll give a very simple answer, and that is anything that makes it easier to get traditional fiat or value into the digital world is good for the crypto industry. It makes it that much easier to invest in, alternatives to the dollar as a store of value, for example. So while I can absolutely see the opinion of other crypto CEOs, if the digital USD comes, what happens to Bitcoin? They would imagine it looks very negative for that. Actually, I think quite the opposite. I think the way that we actually facilitate more use of crypto is by facilitating more use of digital assets. And if you can make those rails that much easier to get the value in and to get it onto your phone and get it into an app and make it easier, then it's up to the individual, right? How they want to invest that money and what they want to hold it in, whether it's a digital dollar, a stable coin, a cryptocurrency, or something entirely different. But it's all about kind of making those rails really smooth and enabling those connections. Then the market forces, will determine what happens in the future.
Morgan, Catherine, thoughts?
Catherine?
Sure. I do think I come in as a moderate. I came from a traditional Wall Street background, understanding how FX or foreign exchange was moving around the world from an institutional level. So migrating into the realm of crypto and realizing, what does this actually mean for folks, and why do they care about it being delivered on such a personal level, or an individual holding the keys to their money? Why do we need to make it to that level? And I think that we're still seeing the difference between, does a surveillance state make for a better economy? And we haven't really solved that question yet. And so I think that that's really where the dividing line will continue to go, is, does digitizing the US dollar enhance the ability for folks to be able to access it, use it, spend it, give it back to families and friends that they need to in order to support their own economies wherever they are? Or does this just further create a kind of a power struggle between the consumer and the opportunities?
Catherine, I'm interested to hear what you think about this. So, all that you just said sounds great, but I would say I'm not sure the goal from the government's perspective. And Morgan, I'm interested in what you think too, because you've been in DC talking to these folks. The goal isn't necessarily to do those things that you just said. They all sound great to me as a citizen of the United States, for example, and a user of money, obviously, right? But I think that the goal from the government's perspective would be one of control. Right, it would be one of control, and it would be one of facilitating their ability to basically fix problems they've been having thus far, right? That fiat currency creates, which aren't necessarily in line with what benefits the actual individual, right? So it's less of a does crypto facilitate a I forget the exact words you use, but that sort of police state, right? It's more step back and say, what is their goal in looking at technologies like this? Sometimes I think that legislators use opportunities like this pandemic in order to move forward things that they have wanted to move forward for other reasons, right? Kind of like what we saw with September 11th, in the Patriot Act, and then suddenly, right, the NSA launches Spectre, and all this tracking is going on under the precipitous of national security, which actually I don't necessarily have a problem with, right? Nevertheless, it was those sort of climatic events which created an opportunity to push those things forward. So I'd like to think it's all for the people. I'm not sure it always is. I think it's more for the government.
Yeah, I'll reiterate something I said earlier, which is, the government is really more they than an it. I mean, so we could disaggregate here a little bit. The Federal Reserve itself is not that eager to do this, and has been sort of had to be dragged a little bit, kicking and screaming. I mean, they're behind the curve internationally in terms of digitalizing. It wasn't really until February testimony by Jay Powell where the Fed chair himself brought it up and said that they were looking at it and studying it and thinking about it, and that Libra had caused them to all sort of lit a fire under them, I think is the words he used, to start thinking harder about this. I don't think what you would see at the Fed specifically in terms of their attitudes towards digital currency, central bank digital currency, is really about control. I mean, the truth of the matter is the Fed really likes to deal with institutions and doesn't is less inclined institutionally to deal with the average person as a consumer of its services. And so I think it's complicated, is the way I would put it in terms of the motivations. And again, on Capitol Hill, I think the interest is very much a set of cross-cutting policy considerations, among one of which is this persistent problem of our very high level of unbanked households in the U.S., and just family households that don't have a bank account. And we're really unique in the industrialized world in this regard in terms of bank account penetration. Our banks have been successful in not being subject to any kind of universal service mandate, unlike banks in, say, Canada, where they're not allowed to turn people away, and charging fees and account fees and minimum balances and all the rest to exclude a significant portion of the population. That's just not something that's really experienced in the rest of the developed world. And I think part of the frustration on Capitol Hill has to do with that, right? It's not so much control as it is about access. But I don't think you can really say everyone speaks with one voice. I think that there's different motivations in different places, right? As I mentioned, in our original version of this paper, our immediate motivation, I'm really a scholar of financial instability and financial crises for the most part. And my thinking about this stemmed from a stability standpoint. But that all being said, I think control from a civil liberties standpoint, from a privacy standpoint, is a really big deal in this area, and it's something that all central banks who are involved in this are going to have to confront the way that they're dealing with that, and it's a problem we have across a lot of policy areas, right, including the privacy of your tax returns is also a big deal. For better or worse, the federal government has to be involved in having sensitive information about individuals, and that is a potential area for abuse that we should all be cognizant of and be cautious about all of this stuff from that standpoint, and law enforcement access and all the rest. So that's a bit of a long-winded, but I think there's a complex web of considerations that are driving this.
I'm afraid I may have accidentally assembled the most moderate on the Fed panel of people that crypto has ever seen. So
we can share with you the extremes of the arguments out there, but I think all of us are realizing that, quarantine isn't going anywhere for us in the near term. So being moderate in our solutions is probably the best plan to make sure that we can get something done.
I agree with Catherine. I mean, we've also, part of the reason, Colin, is, we have to run businesses at the end of the day, right? We have to run businesses legally, and we have to do so, in an environment, that demands a certain amount of, quite a bit of compliance, actually. Gone are some of the early days of the crypto industry with the really strong Bitcoin maximalist libertarian perspective, screw the government and all this kind of stuff. That all sounds great from an ivory tower ideological perspective, when it's 5 guys, with a bunch of venture capital money. But when it comes time to build real businesses like what Catherine's doing, like what we're doing, you have to figure out how to basically tailor the business to be able to have scalable growth and to serve the needs of your customers, without having to, while being legally compliant. And of all the companies out there, actually, like from our perspective with our decentralized wallet, we're probably the most sort of, towards that direction of the ideological implementation, right? Because, being non-custodial, we are carved out of all of these things. But even companies like us recognize, right, that, with FATF travel rule, implementations coming and whatnot, that the industry is moving in that direction. And frankly, in the bottom of our hearts, we all knew it was going to happen anyway, right? We all knew that at some point the government was going to wake up and say, oh, wait a minute, we might lose some control here. And things like coronavirus, I think, are just catalysts, basically. And Libra, as was mentioned, huge catalyst to get people to say, oh, crap, what's going on here? We really need to take a look at this. So, like I said, it's hard to change sort of psychology overall in the grand scheme of things. And that's a silver lining with, these climatic situations. And actually, like I said, I think ultimately, though, it's good for the industry. We want to be able to figure out how to operate. The worst scenario, the worst case, and Morgan, maybe you agree with this, I hope, which is the worst case scenario is that there is no guidance from the regulators or the authorities. And then we're operating in gray fringe area. And then you're never going to get institutional funds coming into crypto. You're never going to get, those that are highly regulated to be able to play in the space. So actually, as we move, towards sort of, that converging point to the traditional financial sort of regulatory environment, it does help legitimize things. The trick is, can we do that and still keep the benefits that crypto affords to users? That's the hard part.
We can certainly still operate businesses within the United States. And if it's not their focus to be towards the end consumer, that's where our focus is, really catering towards the individual retail user, making sure that experience is one that is within the guidelines of the United States. Then they can focus on the larger institutional needs that are at hand.
I would just add, insofar as we're talking about a digital dollar, a dollar denominated asset, it's hard to envision that proceeding without the central bank, which issues dollars, being a part of it in one way or another. And banking regulators are going to care, when does it become a deposit for legal purposes, meaning you need a banking charter? What are the stability implications? Runs on dollar assets raise stability issues and that have to be taken into consideration. And of course, there's a AML, BSA, KYC side of it also. And so once you start saying dollar, I think the central bank is going to be in the picture one way or another. I just don't think that's avoidable.
When you say the word stablecoin, we still have New York DFS regulating it. We still have FDIC insurance covering the dollar deposits at those custodied entities. So there is a degree of already regulation involved, even though they're not using that word dollar. That's
absolutely.
What about Tether though, Morgan? I'm curious what you think.
I'm not really I'm so much a central banking person and not a person that my knowledge is sort of limited to what I read in the papers from time to time. And so I just don't have the depth to opine on certain topics in that world. I come from very much a central banking perspective.
I do want to get to, it seems like several different people have questions that kind of circulate around a similar theme. I'm going to try to combine them into one. They're asking about comparisons with Libra or the digital one, which Adam was definitely talking about earlier. Is this a competition? Is the US playing catch up? And will Libra stand a chance, or is the digital renminbi going to run the international finance?
The modern day warfare is accomplished through information and economical sort of pluses and minuses or objectives, right? So absolutely, it's a competition. Not a competition from the perspective of who can control the technology. It's a competition from the perspective of who is going to be able to leverage the technology to gain global economic benefits. And in that case, I would say I think the U.S. is behind. I think there's a ton of inertia that Morgan refers to from the Fed. I think they have every incentive to keep things the way it's going because the Department of Treasury has a really, really long arm in this world, right? I sat down recently with the head of the Central Bank of Cambodia and here in Tokyo, and not too recently, a few months ago before COVID-19. And the level of control that I understood from his perspective that the Department of Treasury has in influencing even their local economy there in Southeast Asia is tremendous. And it's because of SWIFT and correspondent banks, and it's because of the flow of USD in and out of that country, right? And if you look at the digital RMB, I think this is the it's shocking to me how the world isn't taking this seriously. In 5 years' time, anyone who wants to do business with China is going to have to support the digital RMB. I don't see many companies out there today building infrastructure and financial products to integrate the digital RMB into, existing things like point of sale or e-commerce or even the traditional banking system. It is early, right? But they do have, development kits available, and they are starting to facilitate the ability to interact with that currency. Now, notice something. Notice it's not easy for us. Notice it's not generally available for us, because they have every national interest reason from a patriotic perspective to enable domestic companies to be the ones who provide that technology, so that those domestic companies can basically be the ones to facilitate business between any foreign entity and any company or the government of China. And so, when I am involved in cross-border payments, and I share some history with Catherine relative to some things with Ripple and things of that sort, and you look at new technologies like this and you say, well, why is China not adopting any of this? If China was so ahead, why aren't they the ones using this kind of stuff in order to get an advantage? Well, it's because they're thinking just like the US did when the US created SWIFT, right? They don't have to play by the rules of the rest of the world. Just like the US didn't have to play by the rules of the rest of the world previously. We basically used our superpower state in order to push the rest of the world in order to adopt our technologies, which we can control, namely SWIFT, right? And the current banking system. And China is going to basically revolutionize global banking by using the digital RMB as that same sort of recipe that gets pushed everywhere else. And the idea is, if you want to do business with China, you have to support it. Everyone needs to do business with China. Absolutely, right? So China's the new US when it comes to that. And so, yeah, is it competitive? It's damn right it's competitive. It's competitive because we need to maintain the ability to control our national currency. We need to maintain the ability to be a superpower and have a high GDP. And we need to facilitate global transactions from the US dollar to other currencies. I look at it as perhaps one of the most game-changing things that I think is going to happen from a monetary policy perspective during our lifetimes. I would like to say it was crypto that started that all off. It doesn't even really matter if it was. Moving to a digital asset-based economy, China is clearly leading that way, and I do believe it's all about control. I believe it's 100% about control, and I believe it accomplishes their goals, which are not necessarily aligned with the goals of their citizens, or certainly foreign citizens as well.
Yeah.
Some very strong predictions. What are your thoughts?
You kind of brought up things, especially with Cambodia, that brought to mind the actions taken by certain countries after financial crises. And I'm not saying that the US is going to be taking a playbook from this, but from the outcome of the Asian financial crisis, you saw local currencies become onshore versus offshore, becoming cut off from the outside world to be able to trade, and definitely not trade electronically. I think even the Korean won, when I started trading it onshore, was a voice brokered market that happened to have a Bloomberg ticker. So you'd have, this was not an electronic system already in place. So some of those things really did hold back, but within a way of protecting those countries. So where we're going to see protective measures taking place by the United States is something that I'm a little bit more concerned about, as what steps they'll take in order to defend home turf and jeopardize, as you said, looking forward, being competitive in that innovation that's next to come. So, definitely doing my research on what we've seen come out of financial crises as action points. And one was non-deliverable markets as well as onshore deliverable markets. And the other one was Bitcoin. So.
Yeah, I mean, in terms of the international status of the dollar and its future, the digital yuan has implications, and we'll have to see how it plays out. I think there are some. I think look, there are reasons to predict that the dollar will continue its dominance. I mean, most, central banks' foreign currency reserves are typically held not in we'd say they're dollar reserves. They're basically Treasury securities, right? The U.S. Treasury securities. That's an attractive asset for a reserve currency for foreign central banks. A lot of banks worldwide maintain dollar-denominated deposit accounts. and international trade is dominated by dollars. That could well change, but I'm not. I wouldn't be confident making a prediction about the degree to which digitalization of the dollar really is crucial from a dollar dominant standpoint. I don't know the answer to that. I think there's just a lot of uncertainty about how that will transpire. We certainly haven't seen it yet. I mean, the Fed's response in the current crisis. Look, it's every central bank in the world wanting to borrow dollars from the Fed, not vice versa, right? Doing repos with foreign central banks to supply them with dollars. Not that the Fed needs repo, but the European Central Bank needs dollars. Banks need dollars. That's still the world we find ourselves in. It probably won't be permanent, but it's where we are right now.
That's actually something I definitely wanted to touch on before we've got a few minutes left. So the provisions for a digital dollar in basically all of the legislation that I've seen, nobody mentioned how it could leave the US, which is a pretty critical function of the world's reserve currency, of the currency in which commodities trading across borders happens. I think Rashida Tlaib introduced something into the House Financial Services Committee, and that was the most recent thing that I saw. It has provisions for each US citizen to be able to access a wallet, or each US resident, or each business based in the US, but it does not have provisions for anybody trying to do business with anybody with a digital dollar wallet. Thoughts on that? Is that the case? Is that a failure of planning, or is that how something launches?
That's part of why I'm excited about it, Colin, because I think that it's use cases like that then facilitate individuals to have to find a solution, or companies, right? And that means moving your money into your digital dollars into crypto, for example, and using those rails to send something overseas. I can't speak for what the central bank or those who drafted the legislation specifically were thinking. Maybe Morgan can better, but I would imagine that they were thinking that this facilitates ease of distribution and maybe contactless point of sale, and then it needs to go and flow through the normal traditional banking system if it needs to be transferred outside of the country, such as SWIFT or something of that sort. But all the better reason why companies in the industry like ours can help facilitate those use cases so that it is easy for people to basically send that money overseas in the form of a remittance or something of that sort, right? So like I said before, every time we take another step as a country, or even on a global scale, any country does towards digitizing their currency, I think it's good for the crypto industry, because the benefits of crypto technology, meaning fast transfers anywhere in the world near instantly and very low cost and free, right? That's got to be those, at the end of the day, those have to be the reasons why people end up adopting the technology. Because like I said, consumers always go for things that are faster, saving time, saving money, or make their status better, right? Or improve their health, right? And so, in that sense, then if you have these alternatives, I think that wise consumers will use technologies like that. Years ago, or a few years ago, that was TransferWise. Before that, it was just doing a wire transfer, or Western Union or whatever. And now, now it's crypto based. So I think it's actually a very good thing. I don't think anybody planned this in that sense, and I don't think those who drafted the legislation, left it out on purpose, or there was anything nefarious there. I think they were just trying to accomplish their goals, and then once that money's there, people are going to use whatever rails they can in order to do what they need to do.
Yeah, that's right. In terms of the legislation, it would just be your existing bank-based payment rails to send to another account. That's the way it would work.
So is that a true digital dollar then?
It can be semantic, right? So it depends on what you mean by digital dollar, and I think that's we do talk about in our paper. We're talking about dollar accounts maintained at the Fed. That is a form of digital. The way people speak, let me put it a different way. In central bank digital currency world, people speak about token-based versus account-based, and maybe you all use that terminology as well. I'm not sure, but certainly in the central banking world, when they talk about central bank digital currency, that's what they talk about. And the traditional form, the existing form of central bank digital currency is account-based, right? A ledger entry on the books of the Federal Reserve. And we've had, real-time gross settlement of those payments between accounts since the 1970s. We paid interest on those accounts in the last decade. We didn't before then. Payments used to be completely free until 1980 between those accounts among banks, and then we instituted some charges on those. But that is, in a very real sense, it's digital, right? It's non-physical, and you maintain an account, and you make a payment to or from that account. And so that's one concept of digital dollars. There are other concepts that you're really trying to mimic. Another concept is to really try to mimic the features of physical currency, but in digital form, where you can have anonymity and sort of direct peer-to-peer transfer without any communication to any intermediary at all. That is not the vision of digital dollars that was in the legislation. The legislation envisioned an account-based digital currency on the books of the central bank.
I agree with you, Morgan, and I think that it doesn't stand to reason that it's beneficial for the government to take those aspects that you just mentioned of actual traditional physical currency and port them into the digital world, which is the most ironic thing about what we're reading about the digital RMB, which is that they are talking about supporting, peer-to-peer, not through a central authority type of cash transactions. It's shocking, actually, that they came out and said that. I personally don't think that there will exist a digital RMB wallet that the Chinese government won't have the ability to see or to check the balance of, or to see where transactions are going. I think you're right. It's all about the semantics of it. But to me, that's what the digital dollar or digital currency really means, is to be able to basically mimic the physical cash. But like I said, in prior remarks, I'm not so sure that aligns with the best interests of, authorities when they really, really think it through. I think they're going to optimize things for, what's beneficial for the government. And, frankly, they're in a position to do so. And, in the meantime, the crypto industry is going to continue to innovate, and we are going to create alternatives, right, that are optimized for the individual. And over time, we'll see what the markets end up, doing. Unfortunately, the government has the ability to really control quite a bit, sort of at the macro level. But, as we've seen in the last 10 years in crypto, it's remarkable how they have helped facilitate the adoption of this technology and given us guidelines versus trying to kill it. And, I don't see that changing in the near term. So I think market forces will decide what a digital dollar really means.
And then the best case scenario out of any of this is by using digital dollar into it, people have now realized that you can have money outside of a physical form. So you're seeing more adoption of digital banking apps, more adoption of deposits through checks, through online, the access of realizing you can go onto the internet and access your funds is going to open up more people's financial freedom that they can get to, whether it is through the traditional model or through the crypto model that we're pioneering.
All right, amazing. All right, we are actually right out of time. So I want to thank y'all very much. Morgan Ricks, Catherine Coley, Adam Trademan, thank you for joining us. It's been an amazing conversation. And to those in the audience, hope to see you at the next Cointelegraph Talks. My name is Colin Post.
Thank you.
Thank you, Colin.
Thanks.